Investing in Nepal stock market used to mean standing in physical lines with stacks of paperwork. Today, that entire system lives inside your phone. Platforms like MeroShare allow you to apply for shares and manage your portfolio instantly, whether you are sitting in a cafe in Kathmandu or on a job site overseas. Removing that friction creates a trade-off. When the barriers to access are lowered, the exposure to sudden market shifts is constant. This chart plots the risk. Look at the massive run-up in 2021, driven by hundreds of thousands of new users entering the market at once. Then came the 2022 correction. The index dropped from a 3,200 peak down to 1,850. Portfolios halved in months. For new investors, the difficulty lies in separating actual wealth building from the social media hype that promises immediate returns. The secondary market often moves on a cycle of quick margins that can vanish as fast as they appear. MeroShare processes the transaction. Behavioral discipline determines the long-term outcome. For anyone starting out, the foundational entry point is applying for general IPOs. Traditionally, this is the fixed price method. You apply for a minimum of 10 units, and you pay exactly 100 rupees per share. It operates strictly as a lottery system. It carries very little capital risk, but it requires patience to handle frequent rejections before landing an allotment. This compares the traditional method with SEBON's 2026 book building rules for larger companies. Instead of 10 units, book building requires a 50-unit commitment. To offset this higher buy-in, retail investors get a 10% discount off the final institutional price. This creates a liquidity trade-off. Applying for 50 units at a premium price requires you to keep a larger amount of cash inactive in your bank account. The CASBA system manages this by freezing the application amount in your account, so the funds are only debited if you are successfully allotted the shares. Fixed-price lotteries are accessible to everyone, but book building is a route for those who actively manage their capital liquidity. There is a specific demographic fueling Nepal's economy from the outside. For those migrant workers, the rules provide a distinct advantage. Companies are now required to reserve a 10% IPO quota, specifically for Nepalis working abroad. Accessing this requires exact documentation. You must have an active ASBA remittance account and a valid labor permit linked to your profile. There is also a continuous financial requirement. Your account must show at least 50,000 rupees deposited through formal remittance channels over the past 6 months. Applying to both the migrant quota and the general public quota for the same IPO is considered illegal and will result in disqualification. This reserved quota offers the highest statistical chance of allotment in the market, provided the digital paperwork is kept up to date. The risk profile changes when you move past IPOs and into the secondary market. Here, the convenience of the app makes it easy to make costly mistakes. One high-risk behavior is taking out margin loans to chase stocks based on social media rumors. Leverage multiplies the impact of market movements. If the market undergoes a 20% correction, an investor using margin loans can be trapped with debt that exceeds their portfolio value. This chart evaluates your options by weighing your exposure to risk against the level of discipline required. Borrowing money for rumor-driven speculation sits in the high-risk, low-discipline quadrant. An open-ended mutual fund SIP sits in the low-risk, high-discipline corner. A systematic investment plan is automated. It schedules a fixed deduction from your bank account every month, regardless of market sentiment. This utilizes rupee cost averaging. When NEPSE drops, your fixed monthly contribution buys more fund units at a cheaper price, which lowers your average cost over time. You are choosing to ignore the volatility of listing day prices in favor of a mathematical accumulation of units. Managed through digital automation, this removes emotion from the investment process. The mechanics of the market are set. Your choice of strategy depends on the source of your capital. If you rely on a monthly salary, your path is to automate an open-ended SIP and apply for 10-unit IPOs as they become available. For those working abroad, the priority is converting to a remittance account to utilize the 10% reserved quota. If you receive a large sum from a land sale or a bonus, avoid deploying it all on a single day. Phase that cash into the market over 3 to 6 months. Each of these paths requires administrative maintenance. If your KYC or CASBA status is not updated, your application will be rejected by the system. Do not sit on cash waiting for the market to hit an exact bottom. that timing is nearly impossible to predict. It is equally important to ignore the noise from the speculative segments of the secondary market. NEPSE's digital infrastructure can shield wealth, but only if the investor chooses the certainty of a plan over the allure of a rumor.